Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Clean Energy Falls, and trust me, it's not as boring as it sounds unless you find gas prices thrilling. We'll see if this company is truly cleaning up or just blowing hot air, pun intended of course. This report is basically an update they're required to file with the SEC whenever something important happens. In this case, it involves buying back their own stock. So, what's the story? Clean Energy Fuels Board of Directors decided to start buying back shares of their own stock again. They have this thing called a share repurchase program already in place, and they're dusting it off. Think of it like a company going shopping for its own shares, hoping to boost the price. They even put out a press release about it, which is attached as Exhibit 99.1 if you're into reading those things. Now, this part is mostly legal housekeeping. It just means they're sharing this information with everyone at the same time, so nobody gets an unfair advantage. Here's where it gets a bit more interesting. As of March 27, 2025, they have about $26.5 million left to spend on buying back shares. How will they do it? They could buy shares on the open market, make deals privately, or use some fancy financial tricks like accelerated share repurchase transactions. It all depends on what's happening in the market and what the rules allow. Also, they might use something called Rule 10b5-1 plans, which is like setting up an automatic stock buying machine. The company is not obligated to spend all the allocated money, and they can end, pause, or change the program anytime. Now for the attachments. Exhibit 99.1 is that press release we talked about, and Exhibit 104 is just some technical stuff for the SEC. This is just the company verifying that everything in the report is accurate to their knowledge. The Chief Financial Officer, Robert Vreeland, signs off on it. Now, what does all this mean? A share buyback can signal that the company thinks its stock is undervalued. By reducing the number of shares available, they hope to increase the value of the remaining shares. This is a move that companies do to try and improve their stock price, especially if they have extra cash lying around. Clean Energy Fuels has about $26.5 million to play with in this buyback program. So it's not a huge amount for a company of their size, but it shows they are confident enough to invest in themselves. However, like any investment, share buybacks have risks. If the company's performance doesn't improve, the stock price might not go up, and they would have spent millions for nothing. Also, some might argue that the money could be better used for growing the business in other ways, like investing in new technologies or expanding operations. Clean Energy Fuels operates in the renewable natural gas sector, an industry with both opportunities and challenges. On one hand, there's growing demand for cleaner energy sources driven by environmental concerns and government policies. On the other hand, they face competition from other alternative fuels and the established fossil fuel industry. The risk for Clean Energy Fuels includes potential regulatory changes, fluctuations in natural gas prices, and technological advancements that could make their products obsolete. They might also face higher costs if demand increases and they are not able to meet it. Overall, this report shows that Clean Energy Fuels is financially stable enough to buy back its own stock. It indicates confidence, but with market changes in renewable and regular fuel, anything can happen. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.